What is the monetary policy? Monetary policy refers to the action taken by the country's central bank to regulate the money supply and achieve various economic goals. In Malaysia, the central bank, known as Bank Negara Malaysia, formulate and implement the national's monetary policy to maintain price stability and promote sustainable economic growth. The policy decision often involve setting interest rates, managing the foreign exchange market, and influencing the availability of credit. Effective monetary policy play a crucial role in influencing inflation, employment, and overall economic stability. It is an essential tool used by policymakers to address economic challenge and support the long-term prosperity of the country.
In 2014 and 2015, Malaysia has confronted initial technique amid global uncertainty. So, because of the problem, how Bank Negara Malaysia used monetary policy as a tool to manage the money supply and influence interest rate in the economy to achieve specific goals like price stability and sustainable economic growth. When the world was facing turbulence that will cause oil price collapse, geopolitical risk, and financial market volatility, from risks that will happen, how did Malaysia navigate this unpredictable problem? Between 2014 and 2016, Malaysia confronted sharp movement in global oil price collapse, a weakening ringgit, and shifting investor sentiment. The overnight policy rate OPR was maintained at 3.25% in 2014, ensuring steady domestic demand. However, by July 2016, the OPR was reduced to 3.00% in response to global economic uncertainty and subdued inflation pressure. Despite effort to sustain growth, external volatility lead to capital outflow and currency depreciation. Yet Malaysia's strong banking fundamentals provide resilience, ensuring the financial system remains stable.
The OPR was held steady at 3% for a significant duration from July 2016 until January 2018. In January 2018, BNM raised the OPR by 25 basis points from 3% to 3.25%. This adjustment was made to proactively address potential risk of financial imbalances that were emerging within the economy. Based on this statement that was released back in January 2018, BNM decided to increase the OPR by 25 basis points to 3.25% due to the strengthening global economy and Malaysia's sustained growth momentum. Inflation is expected to average lower in 2018, even though global oil prices remain uncertain. The financial system is stable and monetary policy remains accommodative while ensuring risk from prolonged low interest rates are managed. By May 2019, signs of moderating economic growth became apparent. In response, BNM reduced the OPR from 3.25% back to 3% to provide support and maintain a degree of monetary accommodativeness to bolster economic activity. A later statement at that time released on May 2019, which BNM decided to reduce the OPR by 25 basis points back to 3% from 3.25% to maintain monetary accommodation amid global economic moderation and uncertainties. While Malaysia's economy showed steady growth in early 2019, external risk, including trade tension and commodity sector weakness, continue to pose challenges. Inflation remained low due to policy measures, and the domestic financial markets are stable despite volatility. The adjustment ensures supportive economic conditions, while the central bank monitors risk to growth and inflation. The rationale behind this adjustment reflects BNM's commitment to ensure sustainable economic growth while keeping inflation at a manageable level and safeguarding financial stability.
Malaysia's economic outlook is positive and remains stable until the beginning of 2020. Nevertheless, various challenges begin to emerge in the effort to maintain and improve the country's economy with the emergence of the COVID-19 pandemic. That begin to hit the rest of the world. BNM has taken initial steps to maintain economic stability by reducing the OPR in January 2020 by 0.25%. This measure is to prevent the Malaysian economy from falling sharply during the epidemic and is one of the measures to stimulate the economy to continue.
This pandemic affected the country when the World Health Organization, WHO, made an announcement about this pandemic and caused the closure of the country. Malaysia was affected by the Movement Control Order, MCO, announced by the then Prime Minister, Tan Sri Muhyiddin Yassin, from March 18, 2020 to March 31, 2020 throughout Malaysia. However, the worsening state of the country with the pandemic that began to spread comprehensively caused the MCO to be extended. This has a negative impact on the national economy following the increasing unemployment as a result of restrictions on entry and exit to reduce cases related to COVID-19. The Department of Statistics, DASM, stated that the unemployment rate in 2020 is in the range of 3.5% to 5.5% of the impact of the COVID-19 pandemic in Metro News. The sudden increase in unemployment puts great pressure on household finances. According to Mukraz Madhusan, 2020, this pandemic will worsen the existing economic challenges and cause household income to decrease.
Back in 2022, Malaysia was trying to bounce back. The worst of the pandemic was over and the economy was slowly recovering. But things were not exactly smooth sailing. The world was facing high inflation, the war in Ukraine had shaken global markets, and the interest rate were rising across the board. For a long time, the overnight policy rate OPR was kept at 1.75%. It was the lowest ever and it helped keep businesses going during COVID-19. But by early 2022, price started going up. Food, petrol, goods, everything felt expensive. The ringgit was also under pressure. That is when Bank Negara decided it was time to act, slowly but surely. In May 2022, the raise of OPR by 25 basis points to 2.0%. It was the first rate hike since the pandemic began. Then came more increases in July, September, and November. By the end of the year, the OPR reached 2.75%. It was not about shocking the economy. The idea was to go step by step, keeping inflation in check without hurting the recovery. By 2023, inflation was still around but more under control. In May, the OPR was raised again to 3.0%. After that, it stayed there. Bank Negara chose to hold steady, focusing on stability while keeping an eye on global risks like China's slowdown and interest rate hike in the US. For everyday Malaysian, it was a mixed bag. Loan got a bit more expensive, but on the flip side, the ringgit stabilized, and the inflation didn't get out of hand like in some other countries. At the end of the day, monetary policy isn't just about number or graph. It's about making careful choices to support recovery, keeping price in check, and make life a little easier for everyone. The decisions made in 2022 and 2023 were not perfect, but they helped put Malaysia on a stronger path step by step.
Hi everyone, today let's talk about the Malaysia's monetary policy for 2024. Let's first look at the interest rate policy. For the whole year of 2024, the Nation Bank of Malaysia, also known as BEEM, has been maintaining the overnight policy rate at 3%. Why they do this? I think just want to find a balance between economic growth and inflation. Taking the first quarter of 2024 as an example, Malaysia's headline inflation rate dropped to 1.7%, and the core inflation rate had dropped to 1.8%. Moreover, the central bank expects that price pressure will continue to weaken that year, coupled with the resilience of domestic consumption and the rebound of exports, as well as some multi-year projects and national master plans driving investment activities. Economic activity has improved. In this situation, maintaining the current interest rate level is supportive of the economy and consistent with the assessment of inflation and growth prospects at the time. Now, let's talk about the policy coordination. The central bank strongly supports the government's shift from the previous widespread net like subsidies to more targeted assistance. This may have some impact on prices in the short term, but in the long run, it can improve the efficiency of the use of cycle funds, make the economy more resilient, and the central bank's monetary policy activity cooperates with this change. As for the policy outlook, although interest rate has not changed, the central bank has not been idle and has been paying attention to various influencing factors. On the one hand, the exchange rate of the ringgit against the US dollar is constantly fluctuating due to external factors. If the ringgit weakens, it may bring important inflationary pressure, which can affect the decrease of monetary policy. On the other hand, global economic situation, how other major central banks adjust their monetary policies, such as internal factors such as domestic inflation, may all prompt central banks to reassess and adjust their monetary policies. Overall, Malaysia's monetary policy in 2024 focused on stability. While supporting economic growth, they have not forgotten to control inflation and have also cooperated with fiscal structural reforms, laying a good foundation for long-term stable economic development.
Hi Hafiz, thank you for joining me today. So since I was working on documentaries about monetary policy from 2014 to 2024, I wanted to talk with you about how the OPR hike affects people in real life.
Thanks for having me, Awi. I'm glad to share my experience.
Okay, my first question is, between May 2022 and May 2023, to 3.0%. So, your family effect is the effect?
Yes, we did. My parents had a problem, and when the interest rate increased, our working had to become higher. It affected our working budget. We had to cut down something like we can pay our in and grocery.
So, how about you as a student? Did it change you personally?
If I leave, I have a part-time job, and my employer is working our big because they were trying to cut costs. What's the general cost of living with us? I had to be extra careful with my family.
So, do you think that Bank Negara took the best decision during that period?
From economic perspective, yes. Inflation needed to be controlled, but I think more support is needed to be provided to the low economy, especially during the economic crisis.
Thank you for sharing, Hasri. It's clear that monetary policy isn't just about financial record. It really impacts our daily life.
Numerical audit, I agree, is something we have to understand.
In 2014 until 2024, as the monetary policy had Malaysia to face with economic challenge and change. The oil decline that hit the world in 2014 because the government to earn less money and negatively affect the economy. Therefore, Bank Negara Malaysia did not change the accommodative overnight policy rate (OPR) to support the economy and maintain stable financial conditions. Due to this step, there was less risk for central bank. Trading was stable and liquidity was steady, so household and business could continue their work. The impact of monetary policy very noticeable during the COVID-19 pandemic crisis. This made Malaysia's economy face a significant downturn and health issue where the negara have to slash the OPR to 1.75%. The reason of this move to equal civilian to more spending and to stimulate the private sector involved in market. In addition, the central banks take action such as when a specific industry take a loan, the policy become more easy to enlighten them, and without we realize it can boost the economy become more stable and aided all part to community in their stage of recovery. According to the World Bank and Bank Negara Malaysia, Malaysia's strengthening economy is supported by the timely and easy to understand decision made by central bank. Even as we welcome the next decade and the challenge that come with it, one thing becomes clear and that would lead to this question. How will fiscal policy shape Malaysia next decade? Will our monetary policy remain flexible, inclusive and secure even as the next crisis approach?